Chapter 12. Stock Exchange. Question 7. Answer the following. 8 marks each. 1. Explain the functions of stock exchange. Answer. Stock exchange refers to a specific marketplace where various types of financial securities issued by companies are bought and sold. Stock exchange is also called as secondary market, or share market, or stock market, or share bazaar. Following are the functions of stock exchange. 1. Mobilization of savings. Stock exchange is an organized market for dealing in securities. Activities of a stock exchange are governed by a recognized code of conduct, apart from statutory regulations. This encourages small and big investors to invest in securities through stock exchange. This, in turn, mobilizes savings in the economy. 2. Capital formation. Stock exchange is an agency of capital formation. Through stock exchange, savings of the people, which otherwise remain idle, are routed into productive channels. Good returns on investments and capital appreciation attract more and more investors to invest through the stock exchange. This enables corporate to raise funds by offering various types of securities. 3. Pricing of securities. Stock exchange determines prices of various securities through the interplay of demand and supply forces. Prices at which transactions in securities take place are recorded and published in the form of market quotations. The valuation of securities is useful for investors, creditors, and government. Investors can assess the market value of their investment, and creditors can evaluate the creditworthiness of a company. 4. Economic barometer. A stock exchange is considered as a reliable barometer to measure the economic condition of a nation. Stock exchange is sensitive to economic, political, and social conditions of the economy, as such conditions affect the prices of securities. The rise or fall in the prices of shares is an indication of the boom or recession cycle in the economy. Stock exchange is also known as a pulse of economy or economic mirror, as price trends at stock exchange reflect the economic climate of the country. 5. Protecting interest of investors. Stock exchange allows dealing only in listed securities. Listing is done only after verification of the soundness of the company. Listed companies have to abide by the rule and regulations of the stock exchange, and stock exchange directly exercises control over the management of listed companies. This protects the interest of investors by ensuring safety of dealing through stock exchange. 6. Liquidity. The most important function performed by stock exchange is to provide ready market for purchase and sale of securities. Investors who have a preference for liquidity, that is cash, can sell their securities through stock exchange. This encourages investors to invest in long-term financial instruments without any hesitation. Since stock exchange ensures liquidity of investment, people are induced to buy securities. 7. Better allocation of capital. The securities of profitable and growth-oriented companies are quoted at higher prices as there is more demand for such securities. It becomes easy for such companies to raise fresh capital as prices of their securities indicate opportunities for investment. Thus, stock exchange facilitates allocation of capital of investors to profitable and productive channels. 8. Contributes to economic growth. Securities of various companies are bought and sold on the stock exchange. This process of disinvestment and reinvestment helps the investors to invest in most productive investment proposal. This leads to capital formation and economic growth. 9. Providing scope for speculation. Speculation involves trading a financial instrument involving high risk in expectation of significant returns. Stock exchange permits healthy speculation of securities to ensure liquidity and demand or supply of securities. 10. Promotes the habit of saving and investment. The stock market offers attractive opportunities of investment in different securities, which encourage people to save more for investment in securities. This promotes the habit of saving and investing the same in corporate securities rather than in unproductive assets like gold, silver, etc.